As a trader, you can be able to predict the actual reversal point of the price by using simple moving average indicators. This is one of the secrets of institution when it comes to trading in terms of the moving average application. It is important to know that this moving average application is not applicable, and it is not just about the moving average crossing over each other. This is beyond that. It is about understanding the depth concept of how institutions take advantage of this strategy. There is no trading strategy that is superior to one another. All you need to do is to have a proper advantage that you can leverage on. The moving average helps you to escape price manipulation most often. If you were to be doing a naked chart analysis, for instance, if you were to be trading on this zone and you are seeing this zone as a resistance zone, when price moves here, you should have been looking for opportunity to do what? Opportunity to sell. But eventually, price take away this liquidity, which is manipulation. But if you were to be using the moving average, you should or would have been careful enough. Rather, when you got this confirmation here, when you got this bearish candle and also this rejection of the wick that closes as a bearish pin bar, you should have been selling with stop loss here, and that would have been a great advantage for you as a trader. So let's go ahead and I'll be showing you exactly how institutions take advantage of this moving average and how they trade in order to have the best of result. First of all, the blue moving average you are seeing, this is our 20 SMA, that is a 20 simple moving average. The red color moving average is our 50 moving average. The gold color is our 100 moving average. Then the black is our 200 moving average. Now, when price is in a very strong uptrend, price will respect the 20 SMA, that is the 20 simple moving average. This will help you to predict the strength of price, which means that price will just pull back to it, retest it, and continue in its original direction. Just as you can see here, price went up, come back, retest it, went again, pull back, retest it. So you can see how price keep respecting that moving average. The second is period 50 moving average, and this will help you to determine a healthy trend. So you can see that your second level of pullback will always be to the 50 period moving average. Then the third moving average is the gold line, which is our 100 moving average. So this is in terms of a deep pullback, and look at this here. You can see that price pulled back to 100 period moving average before returning back to the upside. Now this will help you to predict the strength of the market in terms of when you begin to have this deep pullback up to 100, you should know that price is already losing the momentum in the original direction of the recent price. So since we have been in an uptrend for some times now, price now pull back to this 100 moving average and get rejection. That sends you a signal that this trend is getting weaker. Okay, so the more it pull back to the moving average, the weaker the strength be. Once it begins to pull back from the 200 next to 50 to 100, you should know it is passing a message that the strength of this indicator is getting weaker than you think. So you begin to make and begin to think of an alternative, what next to do in your mind. So, having said that, the final level of pullback is the black moving average, which is the 200 moving average. So anytime price crosses this 200 moving average to the downside, it's automatically a change of trend direction. So this pullback here has already changed this trend. Breaking through of it automatically change the trend from an uptrend to becoming a downtrend. Remember, I said the deeper I pull back, the more the trend changes. So you see that when it pulled back to 100, it only went back to retest it and begins to the downside. So if you are using the naked chart, look at what happened here. Higher high, higher low here. It went to give us a new higher high. So it came down here and break structure. So do you see? So most often when price pull back to the level of 100, it almost broke structure. So this is a pullback to give us a lower high, then come back and create a new lower low. So take note of that and see exactly how it works. So now look at exactly what we were saying. You can now see that price has changed direction, and look at price begin to respect what? The blue moving average, which is our 20 moving average. You can see price pull back to it this way and then it drops. So you can see now, because this is a very strong trend, price keep respecting this 20 period moving average. Now you will be wondering that then, if this is the case, how exactly do we make entry? If you've watched our previous video, you will know the exact way that you can make this entry. If price is in a healthy trend such as this, you will not expect first you want to see this move happen, which is the movement of this price that dropped to the downside. Then the second thing you want to see a pullback to the moving average, depending on any of the moving average. So when price pull back to this moving average, you will now be looking forward for what? A price action. Because price pull back to the moving average is not a guarantee that it will reverse automatically. You must take note of that, because you can decide to break the first moving average, break the second moving average, break the 100 moving average, and even back to the 200 moving average, and still break it out and continue its movement in an upward direction. So what do? You need to be patient to get a signal telling you that this pullback that has happened to this moving average has come to an end, and that sellers are about coming in to take price to the downside to create a new lower low. So the best way to do that is for you to wait for a representation. Remember, this is a visual market, and since we don't get to see the market participant as we do in a physical market, we can understand their footprint when we have adequate knowledge of what each of these candlesticks represent. So you know that it takes sellers to return price back in this pullback. It takes buyers rather, because this is a downtrend. So it takes buyers effort to return price here. It shows the strength of a buyers trying to take price up. But we know that the dominant participant are sellers. So this pullback of the buyers trying to take price is because sellers just take profits. And we can see this institutional movement that happens here, because it will only take institution to change the direction of the market. So, and because we have identified that this is an institution that changed its direction to this downside, and we are seeing this pullback, and then you can see that there is no reasonable impulsive move in this direction. You can see that the candles that were formed in this zone cannot be compared to the movement of these candles that bring price down. You can see the body, the strength of those candles. So when this happens, we now want to see what the strength of the sellers returning to take price to the downside. So you now pay attention to the formation of the candlesticks that were formed in that zone. And if you look carefully, you can see this candlestick formation. So here we have the bearish hammer. Alright, or you can call it the inverted hammer. So immediately we have this, you can see this other follow-up. So what do? You can simply, and you know that this is happening around your moving average, so which signify end of a pullback. You can easily put your trend line this way and wait for price to break out of it, or immediately you get this two tweezer candle double confirmation, you now make your sell entry. So you will sell, your stop loss is definitely here, and then you see how price break down out of that zone. Again, you can as well use your indicator window, which is your RSI and commodity channel index, as additional confirmation tool. How do we do that? You will wait for this commodity channel index line to close below the 50, crossing to the downside, and you see that cross of the 50, the close of the candle, then you have your sell, and then you see price playing out beautifully well. Remember, trading this strategy is most effective when you applied it on the 1 hour time frame. Please always apply this on the 1 hour time frame. Again, look at this movement. After this impulsive movement, you see this pullback of price pullback, and then we come to this 20 moving average, we have this bullish candle, right? So let's go by that bullish candle, and then you can see that after this bullish candle formation, rejection from the 20 simple moving average, price crosses above the 50. So you can see how this works. You don't need a stress. All you need to do is for you to use your 200, which is the black moving average, to determine the trend of the market, which is this, and then after that you wait for any of the pullback and you get your candlestick confirmation. Here is another typical example. You can see this is a bullish pin bar, and price got what? Price closes. This case, price was coming from the level of what? From the level of 20, and you can see that cross there. And if you look carefully, this is a typical divergence. So if you don't understand the concept of divergence, it is advisable you watch our previous video. There is a video on this channel where we talked about divergence, and then you can see how that plays out, and it's doing beautifully well. So you can replicate this result by understanding how these indicators function. Here is the indicator setup for this strategy. For the first indicator is our moving average. The period is 20, shift is 0, and then you have the method simple shift 0. You apply it to close. Alright, so that is it. The color is blue. After that, I have the second moving average. The period is 50. Method is simple, so you can apply the color to any style of your choice. As for me, I'm using red. 100 moving average. The style is, this is my color, good. The method is simple and you apply it to close. Then we have the last but not the least, the 200 moving average. and of course you can see the style is black, which is the color, and it is simple. Apply it to close. Then we have our relative strength index 14. You can see the level 20, 80, 90, 10 and 50 respectively. So you can change this particular style to your background. If your background is black, kindly change that color to black. Okay, then afterwards we have our commodity channel index. It is the default setting. The period is 14. You apply it to typical price, high low close, and here are the levels and the color is black. So if you've done everything correctly, your chart will be look. Thank you so much for watching, and if you are yet to subscribe to this channel, please go ahead, hit the subscription button, turn on your notification bell so you'll be the first to get notified or upload our next video, and do not forget to give this video a like, share and subscribe. See you in the subsequent video.